What's going on, everyone? Welcome to Decred in Depth. I'm your host, Angelo, and today we have a special guest returning to the show. Permabull Niño is back. What's going on?
Not a whole lot, man. Just stacking Decred, just like we did in May 2019 in New York. I'm still stacking Decred and still looking at the Decred blockchain regularly.
So a couple things have changed. You're official now. You're a contractor. You're under the umbrella. If you want, give a very, very brief background, just to acquaint the listeners in case they don't know.
Oh, my background in general. So I was an auditor. I'm an accountant by trade. I worked at a Big Four accounting firm, and I worked at a big client out of the New York City office. And that's kind of when I fell down the cryptocurrency rabbit hole. Obviously, public blockchains are just / public ledgers. It makes a ton of sense that an accountant would fall down that rabbit hole. So a lot of the concepts at a high level really clicked for me. And since then, I basically have only looked deeply and cared deeply about Bitcoin and Decred. And I keep falling deeper down the Decred rabbit hole every single day. And up to the point that now I am a contractor for the project. And it's awesome.
So let's talk about that process. How was that putting the proposal and, speaking to the community and getting the feedback and getting everything in place?
It was really interesting. So just like I mentioned before, I was an accountant by trade before I got into all of this. And when I first started at Ernst & Young, my main client that I was supposed to go work on was actually in busy season. So for people that don't understand the audit racket, basically there's a busy season, which means the companies are trying to close their financial statements so that they can present them to the public. You're presenting the annual financial statements, whereas you also do quarterly reviews, but it's not the level of detail and intensity that an audit has at year end. So because they were doing that, and I was not professionally equipped, I didn't know all the skill set, all the different rules within EY, how to use all the different interfaces and stuff like that the company leverages. They were like, you know what, we'll bring Jordan on after busy season. So I actually sat on the sidelines at the company for like 2 months or 2.5 months or something like that, doing zero work. And I was still receiving a salary, which was kind of insane, right? When you look at the Decred contractor model where, you only get paid unless you put out like work, right? Like you're not going to get paid for having a pulse, right? Which is basically what I was getting, at this Big Four company. I might have already said that it was Ernst & Young, but, all things considered, it's been really interesting being like in a model where it's like, you are heavily incentivized to put in good work and high quality work, right? Because another part of the thing that comes with it is that because it's a contracting model, right? Unlike a salary where you basically are kept on board, as long as you're doing a good job at, you're going to be kept on board, still receive a salary and stuff like that. Whereas with Decred, you need to submit a follow-up proposal once your funding runs out, right? So the incentives are just so heavily stacked towards you doing a good job. And then, also with that in mind, you look around the community and you look at all the different people, just from the devs to the other researchers to, the marketing team, just everybody from top to bottom within, Decred and the community is just performing at such a high level. It's just, I'm just trying to make sure that I keep pace with what everybody else is doing. But it's been awesome. But in terms of, the whole submitting a proposal, that was very interesting, right? When I worked in public accounting, when at the end of the year, they bring you into a room, it's just you and one person from HR, and they're like, this is what the variety of teams that you worked on throughout the year thought of your performance. And this is your review grade. And with this in mind, we are going to give you this percentage salary. What do you think about that? And, they ask you what you think, but in reality, there's no negotiation going on, right? They're just like, here, you're going to take this salary. It kind of is what it is. Good job this year, pat on the back, and that's just the way it goes. Whereas with Decred, you submit the proposal, which is what I did, and out of the gate, I was a Polytea noob. I didn't really know exactly what I was doing, and I submitted just way too much request, especially for I think I put 3 months and like over $20,000, which is just super heavy. There's no way, like now that I'm in the system, there's no possible way I could have worked through that. Even if I'd had like even more time, right? Like I think the best way to do it, at least for me, is move smaller and then you can incrementally move, just the way the project moves, right? So it was really interesting submitting the proposal though, because you look around at the comments, some of them are like really positive and they're like, oh, really excited to see this person submitting a proposal. This type of research or whatever work you're trying to submit it for is needed. I will be voting yes to this. And then it's interesting though, when you start getting the feedback from the people that are a little bit, like on the fence, or like they're not sure if they want to fund this type of work. And, it's almost, when you're like going through it, you're like, part of you wants to almost take it personally, but then you realize like, no, this is like we're all trying to create value here, right? We're trying to make Decred more valuable, and we want to do it at a good bang for our buck, right? Because there's actually a spread, which a lot of people don't talk about. People think that a lot of these proposals are just about cost, right? Like it's not just about cost. If you're like, oh, this proposal is expensive, what they really mean when they say a proposal is expensive, they're like, the value that the project gets in relation to how much they are demanding is low, right? The ROI for the project is low. And you want to make sure with each proposal that the project is actually capturing a spread, right? There's a certain value that I receive and there's a certain value the project receives. And you want to make sure that at least that the Decred project is receiving a spread, is coming out in the black on all of these proposals. So, naturally when I got a little bit of pushback on my proposal, you start getting a little defensive, you start getting like a little offended, but then you have to like reality check yourself and be like, listen, I would probably be doing the same for another proposal that I wasn't completely sold on. And it is completely reasonable and rational to be, questioning when people come around asking for money, right? So it was a really interesting process. I am stoked that the proposal passed because it's really, I've told some people, I think I've told you this in private, it's really just, it's nice to like work by yourself on certain things, but to contribute to a large project / team-based goal in terms of becoming a contractor for the project, it has just really ramped up my productivity. So in general, it's, the whole process was really interesting. I learned a lot, and coming out of the other side, I have a much, deeper appreciation for the off-chain side of the governance model within the project.
Interesting. So now, how has your perception changed on Decred's governance since our last interview, now that you're a DAO contractor?
It's really interesting. I have friends that work in, legacy businesses, right? When they receive a salary, they go to work every single day. And, it's really interesting. Like I said before, when I worked in public accounting, I even had my downtime where, you're still getting paid for basically having a pulse. And sometimes that happens with, all of my friends, not even the ones like in the town that I live in, or where it's just like anywhere. This happens to people everywhere. So it's very interesting, the model of getting paid out exponentially instead of linearly. And by exponentially, I mean just basically like because you only get paid for how hard you work, you want to work harder, right? So from that perspective, it has been incredibly interesting. And then from the on-chain perspective, what has really, it's really funny, when I got into Decred, from the accounting point of view, I just think, Decred's distributed accounting model, hybrid proof of work, proof of stake, especially Decred's specific implementation of it is just like, it is, people talk about triple entry accounting, and then Bitcoin's implementation of triple entry accounting being incredibly unique. Decred, in my opinion, it just takes it to the next level, and that's what sucked me into the project, right? Just because that's what I understood as an accountant with an accounting background. But now I'm starting to gain like a much higher level of appreciation for the on-chain perspective in terms of implementing network-wide upgrades. And you look around at projects like Ethereum, they're like constantly hard forking, but like every single time it's a nightmare. You keep hearing about all these hiccups and stuff like that in terms of, coordinating to implement a hard fork. Whereas with Decred, because everybody has to upgrade prior to the voting, right? Upgrade versions prior to the voting and activation. Everybody's already good to go. There is no downtime. There is no panic. It is all just set in stone. And, from the, technological perspective, when you think about, oh, this is tech, it needs to be upgraded at some point, there's a lot of validity to that, right? And, I'm not saying that you need to be hard forking just for the sake of it, right? Which Decred does not do. It's always, with a bigger goal in mind. And it's always done with like an overwhelming majority, right? So that's also super important. But, if you look at this not only as money, but as tech that eventually needs to be upgraded, Decred's on-chain model is incredibly effective. And, because it's differentiated from the Bitcoin, hard to change model, but and also done in an incredibly transparent and, calculated way. It's incredibly unique, helps it move fast, but at the same time, it allows the project to, move slow as well, right? If we want to move if there's not, consensus over something, then it'll take a while, and people can get through all the issues that they have. But at a high level, on-chain governance, the way Decred implements it, brings a level of transparency and accountability to all people and stakeholders within the network that, gets everybody on board, breeds confidence, and helps the project move forward without having a huge, hiccup in terms of implementing like a hard fork, for example. So, I've slowly become not only a Decred hybrid proof of work, proof of stake bull in terms of, enforcing digital scarcity, but also from the perspective of, pushing this forward and, making changes that are necessary in a way that is actually fair and transparent.
What is it about the on-chain data that you find so attractive? I know you spend the majority of your time doing that.
Yeah. So, what initially drew me to, on-chain data is that I was already looking at ledger data anyways, right? I was an auditor, they feed over the financials, they feed over the in detail, account balances and stuff like that. And you start going through the data, do testing and stuff like that. So I was already doing this type of work beforehand. So I didn't start making that connection that it made a ton of sense that I went from like internal private ledgers to external public ledgers, looking at them and just doing analysis on them. But it was a very obvious jump for me. So, and then you go from there, right? I've said this before, and if you look at my pinned tweet on my Twitter profile, there are only two coins that I'm willing to hold, and it's Bitcoin and Decred because of their distributed accounting scheme. Because at the end of the day, it's a distributed accounting / digital scarcity revolution. So, you want to own the coins that are dominant in that regard. So Bitcoin and Decred, in my eyes, are the dominant coins when it comes to enforcing digital scarcity. So I was like, all right, well, look at Decred on chain. And because, I have that theory, that hypothesis, that investment methodology that I want to own Decred because it's a dominant hybrid proof of work, proof of stake coin. The one way to check it, like Checkmate likes to say, actually, I want to see if this thing has a pulse or not, right? Is this thing alive? Does the on-chain data even make sense? Is it completely nonsensical, right? So looking through Decred's on-chain data, it helps scratch my own itch to an extent. It helps me reinforce my bullishness, and it also, at a high level, what's also really interesting is that with public blockchains, what they bring to the table in terms of the world is that they provide a fully transparent system where moving value is unstoppable. So you get really, really true behavior of what's actually going on with the way people work because you don't have things in the way. In a very Austrian sense of, from a very Austrian perspective, it's just very little interference, and it allows you to get very close to the truth. And because of Decred's system breakout in terms of the way people transact with the network, there's two different ways, right? You have tickets. People buy tickets to commit to staking, to participate in governance, and provide security to the network. And then you have people, just normal transactors on the network, right? Like if I want to send my money from Binance to Bittrex, or Binance to my wallet, or Bittrex to my wallet, there's that type of transacting. So when you have ticket transacting and standard transacting, it's actually incredibly unique, right? Because with Bitcoin, you do not have that. With Ethereum, you do not have that. So Decred is and because of, Decred staking is very dynamic, right? You don't just lock your coins up and they never move. They're constantly moving, right? So because you get that flush out, it just makes Decred a very incredible beast just in general to dive deeper into and to, look at the on-chain data.
Understood. So let's cover your last two papers. The last one was on block subsidies. What made you start thinking about block rewards?
So I was talking to a Neil from Delphi Digital, and they showed me their Decred piece, which was very high quality. If anybody wants to go read that, they should definitely take a look at that. But yeah, it was really good. And I think the whole community was really excited that they wrote a piece about it, especially because those dudes are actually they're Decred bulls too. So it's nice to it's always nice when you have somebody smart in the space that it's like, oh yeah, I see the value in this. So that was good. Big shout out to them. But within the piece, at one point, they compared the market cap to the total block rewards paid out. And I noticed at one point that the price had recently bottomed off of the block rewards paid, or somewhere near that vicinity. And I was like, that is incredibly interesting. And, just in general, from an accounting perspective, from like just a business person perspective, I'd already had the thought and idea of diving into block rewards, right? And valuing cryptocurrencies in a bunch of different ways, right? You can do like some different types of DCF models, discounted cash flow models, or like evaluating cryptocurrencies like perpetuities. So this idea had already been running in my head. So that's where I got the initial idea. Do you want me to start going through like the piece in general and just like, do people want the high level overview of what the piece was about?
Yeah, absolutely. If you want to explain a high level overview of the whole paper, that would be great.
So what this whole piece was about when it comes to block rewards, what's incredibly interesting about block rewards is that they are deterministic and they do not change, right? You could be in a bear market, you could have miners capitulating, you could have the price at an all-time high, but no matter what, the block rewards are being released at their predetermined schedule, right? And because they're so consistent, that sets the general pace, like and to an extent, you could compare it to a heartbeat. And then when you combine that with humans, which are incredibly emotional and volatile, and you can see that in the price run-ups and dumps in cryptocurrency, you get the combination of two forces. You get steady and volatility, and that shows itself in the value of the block reward. So that's what's incredibly interesting, not only looking at block rewards denominated in DCR value, but also in USD and BTC value. And at a high level, before I get into all the different sections within the piece, one thing, my biggest takeaway about this whole thing is just like any other business, just like any other entity, just like human beings in general, we all want to live in profit. And public blockchains want to do exactly the same. They want to issue their block rewards to incentivize people to commit to the network and to make it more valuable, right? And what Decred's blockchain does is that it actually, interestingly enough, has three different ways block rewards are issued, which is proof of work, proof of stake, and funds that are issued to the treasury. The proof of work dominates 60% of the block reward. Proof of stake is 30%. And the last 10% goes to the treasury, which you see being issued on Politeia for different proposals and stuff like that. So and once you start to think about it through that lens, especially through Decred, is that you start to understand this is an entity. It wants to survive. It wants to become more valuable. And the way that it keeps us looped in, or it motivates more new people to get looped in, is through its block reward. And, because Decred's block reward is actually, limited, right? We are capped at 21 million Decred ever, right? So there is a need to compete for these block rewards, and you can do it via the POW landscape, POS, or the treasury. And so there are three different considerations basically that you can take into account throughout this piece. The block rewards paid to date, right? That is effectively the income statement to date for the network, right? Since Genesis up until now, has the network been operating in profit on its block rewards? And the way you calculate profit basically is like, what is the network value compared to the DCR or USD value of block rewards that have been issued to network participants over time? And, the findings from that, were incredibly interesting. The main takeaway with that was that in general, the block rewards in this bear market and in prior, the last time Decred bottom, which was like late 2016, early 2017, was that, the POW rewards paid to date line is what put the bottom in. So it kind of tells you, there is something significant in terms of the way people value the block rewards and the network, in that the miners, as the natural largest sellers of Decred, they can put the bottom in on the network. So that was the big takeaway from that. And then another thing you need to consider is the block rewards to be paid. That, and the way you can look at this is, block rewards that haven't been paid yet. If you look at Decred as a, business that obviously nobody owns, that's cash on hand, right? That is money that you can issue to motivate people to contribute to the network. So that's like, it's war chest basically. And, once again, the patterns reveal themselves once again, that you can see based on so I drew different, I don't have the charts obviously because it's a podcast, but if you go look at the piece, the different, block subsidy lines, have a very big impact on market value. People react to these levels because unless somebody's been doing this type of work privately up until this point, I don't think people have been thinking about how many block rewards are left and how is this, am I going to sell these levels? Do I want to buy these levels? Is the network relatively cheap? Is it relatively expensive? And, it's interesting to look at it, just blockchains in general through this perspective, just because, these are monies and we are all speculating on them. So to an extent, you want to see how the investment is holding up, right? Is the network more valuable than its cash on hand right now? And if you go look at the charts, it was the case when I released the article, and it is still the case today that the network is trading below its cash value. So and then the last and final section, you have just the combination of rewards that have already been paid and rewards that are to be paid. And the combination of those two gives you basically what is the big picture? Where can this thing, if all the block rewards were issued today, at what market cap would the price need to be for the network to have considered to be a successful endeavor, right? Is the network more valuable or less valuable than the block rewards that is paid out over time? And once again, we're still trading below those levels. We were during the bull market, actually, though. We were guided very strongly during the uptrend by the total block rewards paid, the total block rewards paid line. So, you start adding all these things up and you start to look at, Decred, Bitcoin, block rewards, all these things from a new perspective. And, the overall conclusion of the piece, though, is that, in my opinion, the block rewards are the most logical way to value these networks fundamentally. And I think it is just the tip of the iceberg. And I was excited to get this piece out. I'm glad it was, well received, and also super huge thank you to Checkmate, he does an amazing job, reviewing some of my trash that I write. I'm a terrible writer. So he's like, dude, this is not good. But, I appreciate his help, but at a high level though, it's just, it cemented the idea in my mind that block rewards are the foundation to valuing a cryptocurrency. And like I said, tip of the iceberg, still a lot more work to be done, not only for me, but just from like the space in general and other people that are looking at this stuff.
Now, we know DCR has an advantage because of its ticket system when it comes to Unchained Data. What are some of your findings, and explain your obsession? The ticket obsession is just incredibly interesting. Just the fact that there is a proof of stake system out there that is incredibly dynamic. And, in the case of Decred, I can't remember if I mentioned this earlier in the podcast, but basically because the way tickets are designed and you also have normal transacting on the network, tickets are how you identify hodlers. If you want to find a hodler in Decred, ask them if they have tickets, right? So that is pretty much the backbone of the hodler system within the Decred network. Because, if you hold a ticket, that means you want to participate in governance. That means you want to secure the network. That means you want to try to accumulate as much as the block reward as possible through receiving, proof of stake rewards. So because Decred tickets are just so central to the project, and as you already know, I am incredibly bullish on Decred, it's very worth my time and worthwhile to dive deeper into how things shake out with the network over time and how ticket buying behavior follows along with that. Now, you've taken the time, you've created certain, I want to say, proprietary or unique indicators to some of your findings. One of them that I noticed you named ticket volume weighted average price. You want to go into that and explain it?
At a high level, what people care about at the end of the day is when you are, a lot of this stuff, you just keep in mind, this is a lot, some of this stuff comes off as very, money focused and trading focused and stuff like that. But I think, it's important what I like to do in my research is establish fundamental truths and then apply those to how it impacts the way people are interacting with these systems. And the way they interact with these systems shows up in the price, right? So the ticket volume weighted average price aims to hit on the cost basis, right? And the cost basis of DCR that have been submitted into tickets over time. And throughout the piece, I established two big time frames that are incredibly significant No, not 2. I actually do 3 in this one. So 14-day, 28-day, and 142-day ticket volume weighted average price, which, 14 days, how you on average 50% of the ticket pool gets filled up in that time. 28-day fills up the entire ticket pool, and then 142-day is how you establish. Not how you establish. It's how long it takes to. It's how long it takes to go through the entire ticket pool and make a ticket expire, right? So when a ticket expires, that's an incredibly significant period of time, right? So you want time to fill up the ticket pool, and then how long it takes for a ticket to expire, or to guarantee that every ticket in the ticket pool has actually voted. So because of the way a lot of people don't realize this, and I forgot to mention this in the piece. What's interesting about the ticket pool VWAP stuff is that because of the way Decred's proof of stake algo, adjusts so reliably at this point, the TVWAP prices run very closely to normal moving averages you can see on TradingView. So for people who didn't know that just so you know, that's something you can add to your work, right? So like, for example, on my TradingView charts, I have the 28-day, 14-day, and 142-day moving averages on my charts. But in general, it was a really interesting piece. I think what the whole point of that piece was, though, to lay a foundation, keep it simple on the first one, and give people an idea that there is a certain level of coherency or coherentness to the on-chain data surrounding tickets. So that way, moving forward, now that we've established certain fundamental aspects of the Decred network, ways to look at the ticket data, show that it's coherent, we can dive into more detail and not focus on things that have already been explained before, right? So if you establish the foundation, you can start going into more detail. So, but for me, the biggest takeaway from the piece, and the part that I found the most interesting, was my personal favorite part of the whole piece, was when I did the 142-day cap, and which is 142-day volume weighted average price market cap of Decred versus the realized cap, right? Because what's super interesting about this is that the realized cap, just for people who do not know, it calculates the current market cap based on the price at which coins last moved. And because, with Bitcoin, there's certain coins that haven't moved for a very, very long period of time, right? Whereas and those are the HODLers. That's how you identify a HODLer in Bitcoin. But in Decred, the tickets make it so that HODLers are actually constantly moving their coins, right? So you are getting very, very real-time feedback from people within the network, not only the normal transactors, but also the ticket holders, the way they value the network. And because it takes 142 days to move through the entire ticket pool, that guarantees every single DCR in the ticket pool is moved. That actually runs very closely to the realized cap. And the spread between the two shows where there's an accumulation and capitulation premium or discount. And I ended up, as you know at this point, I ended up releasing another piece which focuses a lot on this accumulation or capitulation premium or discount. And I think that covers that piece to a certain extent. Basically high level, though, I kind of just hit on that. I wrote that piece to establish, the foundation framework, and then just move from there. And yeah.
All right. So let's cover VWAP and why it's important with DCR.
Oh, I think, basically, I think I kind of hinted at this before. There's not a whole lot that you have to get too cheeky with or anything like that. But, when it comes to the volume weighted average price for Decred, you just want to know what everyone's cost, get an idea of what the cost basis is of people within the network and how they react to what their cost basis is and the way the price performs over time, and there's other ways you can start looking into stuff that require more detail, which I'll probably look into in other pieces, like volume, amount of volume that's going into tickets, the ROI on tickets, the amount of the coins moved on chain as a result of different ticket prices and stuff like that. So, that's something for another time. But basically, this whole piece, the gist and the takeaway is that cost basis matters, and setting an initial foundation and understanding of tickets and how the market reacts to ticket prices and stuff like that was important to establish. So that's pretty much the gist of that piece.
So Nino, now covering your third piece, you got into HODLer conversion rates. You want to get into that and explain some of your findings?
the main takeaway came from the VWAP piece that I put out, that, you saw the 142-day cap compared to the realized cap, and the spread between those two resembled an accumulation premium or a capitulation discount. The main issue, though, that I had with it was that at times it seemed to be a bit laggy. In general, what the 142-day cap and realized cap crossover does very well is that it confirms a trend very well. It's like, all right, this is where interest is starting to begin. There actually might be momentum. There might be some legs here. However, it's laggy. So what I wanted to do is cut out the pricing and just focus on raw DCR moved on chain for this piece. So that's exactly what I did. And I'll just jump into it now. The way HODLer conversion rates work, there's two different types of rates. There's the raw HODLer conversion rate and then the adjusted HODLer conversion rate. The raw HODLer conversion rate just basically calculates what percentage of coins moved on chain are attributable to ticket holders. And, this is naturally very interesting, right? Because ticket holders are the hodlers of the network. And the people that are not ticket holders are the marginal buyers and sellers of Decred. So when you start to compare who is dominating the amount of DCR moved on chain, you start to get an idea of, are we bullish or bearish? And, an obvious takeaway with that section in the piece is basically spikes upwards in both conversion rates are inherently bearish, because that means hodlers are the main participants in the network. They're moving the majority and bulk of the DCR, and that marginal buyers and sellers are not showing a heavy amount of interest in interacting with the Decred blockchain. The issue with the raw HODLer conversion rate, and the reason why I ended up having to make an adjusted HODLer conversion rate, is that over time, the DCR supply increases, right? Every single 5 minutes, there's a new block and new DCR are issued. And because of that, that affects the dynamics at play in terms of figuring out if something is bullish or bearish. Because let's say the HODLer conversion rate in 2017 was at 20%, but let's say we never revisit that again, right? And the reason that can happen is because the supply is increased and the amount of coins that are actually in the ticket pool have gone up a lot, right? So because of the amount of coins that exist that are new on the network, and two, the amount of coins that are actually locked in tickets, that can impact the percentage share of DCR moved on chain that are actually attributable to tickets or not, right? So the way I was able to come up with a bull bear line, because some of these indicators, what you really want is sometimes just like a binary thing. It's like, this is worth holding right now. People are very interested in it, or people are disinterested in it right now. And what I did was I subtracted the percentage of supply locked in tickets from the raw HODLer conversion rate. And as long as they're dominating the flows, then that it's, not necessarily the best time to do it. So the difference between the raw HODLer conversion rate and the adjusted HODLer conversion rate is that the raw HODLer conversion rate just shows if things are like, if the network's being interacted with a lot or not. But what the adjusted HODLer conversion rate does is like, you set a benchmark, and whether or not you can figure out if you're below or above the benchmark.
Understood. So what are you working on next? And if you have any closing thoughts?
I'm still moving through, my contracting work right now. I'm doing a bunch of different research. Looking at a bunch of different things. What I'm actually focusing on a lot right now is, I'm going back down the block rewards rabbit hole, but I'm also focusing on the ROI. So there might be a piece coming out on that in the near to medium term. I still haven't, I'm starting to get some good looking data, but the problem is that it needs to be cleaned up a bit. So if once it's polished, it looks good. My next plan of attack is to hit on the ROI on tickets. But for people that are potentially new to Decred, the best thing you can do is go read the documentation on the decred.org website. You can jump in the matrix chats, talk to a bunch of people, and read a bunch of articles. I'm putting out articles, Amar's putting out articles, Checkmate's putting out articles, Richard Red's putting out articles, Seth Benton's put out articles, everyone's putting out articles, Amar's put out articles. So there's a lot of good Decred literature out there. So by diving into all that different stuff, you can get, do your own research basically. And otherwise, feel free to, hit me up on Twitter at Permabull Niño.
Yeah, if you really just want to simplify, just follow Checkmate or Nino on Twitter. That's enough. I appreciate you coming on the pod, man.
Thanks for having me back on.